Alrighty, traders, TikTok. We're heading towards the rate decision here for the Canadians, and looks like they're going to keep the rates unchanged. But we're going to go ahead and take a look at the details of the trade once the announcement is going to take place. We'll go ahead and see how the Canadian dollar fares against the other major counterparts, and that's going to come up in the next 15 minutes. But we're going to talk about the details before the announcement. Let's see you right after this. All righty, traders. Well, welcome back to the session. I'm going to go ahead and just kill my background right here because I think it's slowing down my it's giving me a little bit of a lag going on here. There we go. All right, traders. Well, welcome to the live show. I was planning to have a Spanish translator. Unfortunately, I do not have one here today for our Spanish viewers. But we're going to go ahead and take a look at the markets from a technical perspective. And I think everyone should understand whether you speak the language or don't speak the language. Everyone speaks technical analysis, right? I mean, that is an international language when it comes to technical trade setup. So we're going to definitely take a look at this. Now, I want to take a quick look at the Canadian crosses, and I'm going to start off with the Aussie CAD. But just before I do that, let's just go ahead and pop in here on the calendar. And here is the and again, I've got it labeled as the Canadian rate decision. It is not the Canadian rate decision. It is actually the CPI. But the most important thing here, traders, that you have to realize is that the CPI numbers does determine what the central banks are going to do. So this is not the actual rate decision that's going to be made, but it's certainly going to be a lead up to what the central banks will decide on once the number is reported, because that makes us to believe whether inflation numbers are high, whether the central banks are going to raise interest rates, or if the inflation numbers are low, there's a possible hike, a cut of interest rates that could come on the table. Now, let me just talk about the U.S. Central Bank, right? U.S. Feds are talking about a 2 cut in interest rates, but everything is going to be dependent on the inflation numbers. The same thing is going to be for the Canadians. The Canadians will start having conversation about interest rate cuts if the inflation number is going to be a downside move, right? But if we see inflation numbers coming out today, and by the way, FYI, as you can see right here, inflation year on year, we're looking at a reduction in inflation. Now, what would that mean? That would normally mean a downside move in the currency with the anticipation that there's going to be rate cuts moving forward. But that's based on the speculation that the central banks are talking about interest rate cuts. And keep in mind that a 2% mark is what most central banks are looking to chase after. That's what they're looking to target. But if the central bank doesn't believe we're going to get to that level in the near term, then they won't be talking about interest rate cuts until they start seeing some improvement in the actual number. And so as we go ahead and we take a look at the details this morning, what's important, traders, here is not only what is announced, but what does the market perceive the trend to be like. And so as I go ahead and I take a look at the actual numbers right here, and the reason why we're so sort of invested in this currency is because we currently holding, if you follow my trade ideas, we're holding a lot of Canadian buy opportunities, right? We're buying on Canadian. We're looking for Canadian strength over the long term. And as we go into different currency pairs, I'm going to break it down so that we can understand what is the current bias. Very important. What is the current bias, and what do we anticipate from an overall perspective on a certain period? So this is the Aussie CAD. So let me bring some perspective into this right here. We can certainly see that there's been a lot of buy-side liquidity right here that price has moved into. And that's important, traders. We have to have this belief that the market's chasing after liquidity levels, right? And we're talking about support and resistance levels. And these support and resistance levels are where we see buyers at and we see sellers at. And so if we have this belief that price is always going to be targeting these liquidity areas, then we have to believe that in the market, now that we've hit liquidity, buy side liquidity levels, we're now expecting the market to correct itself. All right. And that's what it is. The market's always looking for not equality, but it's looking for equilibrium in the marketplace, right? We're looking for equilibrium. And that means that right now, the Aussie Canadian dollar would be looking for some sort of equilibrium in this swing low, swing high, which means this range that we've seen the market move in. And I'm going to go ahead and plot a couple of things over here. Let me just pull in something here for a minute. So I'm going to look at this right here. And I'm going to take a look over here and I'm going to say that this swing low, swing high right here, here's the range we're talking about. And so we're looking for price to come back down to equilibrium. Now, we can see that there is a swing high, swing low, swing high, swing low. And we always saw price returning back to the 50% level. And this is what we're looking for right now. I can also see that there's some sort of wave structure right here, a wolf wave pattern right here. And we hit 1, 2, 3. And now we're also looking for price to target this sell side liquidity right here. We're inside a fair value gap as well. So it's going to be fair to say that we're going to see price creating this reversal here. Now, we don't have it. We don't have the reversal in play yet on the daily time frame. But we're going to say that we're going to look for equilibrium, and therefore price will then go ahead and target this low. And when we have the stop rate, we call it a stop rate when price takes out this sell side liquidity. We're looking for a stop rate, but not only looking for a stop rate right here, but then we're looking for displacement in the market to confirm that we have a good, solid market shift. All right, we want to see market structure shift. And when we have that, then we're going to go ahead and look for price to come back up to retest resistance and then sell off back down towards the support area right here. And so we don't have it yet, but we are anticipating. That's on the Aussie Canadian. Now, if that's the case, then what direction do we anticipate the market to move to? We're expecting the Canadian dollar to strengthen against the Aussie. Now, you might say, well, Big Dog, it could be the Aussie actually weakening, not necessarily the strength coming out the Canadian dollar. Fair enough. But let's take a look at some other currencies. All right. Let's go to US dollar CAD right here. US dollar CAD has gone ahead and actually taken out this support level upward trend line right here. And we're trading on the sell side of that trend line. And so we have, if you look at the bigger picture on the US dollar CAD, what do you see? You see consolidation. You see strong, equal highs. You get strong equal lows being formed right here, creating this big sort of setup right here that's showing us that since the early part of, or at least let's call it the latter part of 2022. This is how long we've been range bound on the US dollar CAD. And we've had fundamental announcements. We've had rate decision announcements during 2022, late 2022, up until today. And yet we still have not broken out of this range. Price continues to move back and forth inside this range. And it's been no different, right? We've seen price moving up, down, up, down, up, down. And we've just recently come off the top. So what do we expect? What is our sort of our bias on this long term? It's bearish. It's got to be. And we've got to expect that price is going to come back down to retest 132 and change. So it's no different to what we're seeing right now. Now, fair enough, we could look at the daily time frame right here. And you actually look over here on the daily time frame, the last move that we had right here. All right, the last move that we had right here was this bearish candle that created this low and high. And since then, price is not able to break through the high, nor has price managed to break through the low. So the bias is neutral right now, and rightfully so, with the market moving sideways. But if we have to take the last directional bias, it was bearish. And so as we move out of this neutral zone, what we have here is we have a high low that price needs to break above in order to be able to create buyers. Now, take a look at the candles. See the candle right here, this bullish candle? Notice that price never broke above the high low on the next day trading. And the same thing on the next candle day traded. We've created a high low. Price never broke and stayed below the high low of that. So when you look at this, you go, okay, the first candle failed to break above. So that means that we're now moving into a bullish bias. Then this candle failed. We're moving now into a bearish bias. Then we're moving back into a bullish bias. And in today's trading, now it's going to be once again a decision. Do we break below or above? And we're talking about closes above or below to confirm the bias. So I'm going to say this, traders, that we're really not going to get a confirmed directional bias, even with the news out today, until we break below the previous day's high or low and stay and close below to give us that confirmation. We don't have that. All right. But if we have to look at the bigger picture, as I just did, the bigger picture tells us that 132 is coming into play on this particular currency. Now, I'm going to go to one more loss because we've got about 2 minutes left before the news comes out. All right. And I'm going to go to the CAD Swiss right here. If we look at the CAD Swiss, we notice that the CAD Swiss long term is looking for price to move higher. Why? Because we have this wave structure. We have an internal wave structure. We see here wave 1, 2, 3, 4, and 5. We're looking for price to target this area right here around about 67.80. So between 67.80, maybe 6,700, maybe 68.30. Those are the areas of resistance that we anticipate price to move to. Again, could we see a dip to the downside? Well, just in the short term right here, you can see that we have had a fair value gap right here, and price is actually using that as a support level. And so if we continue to move north, if today we do see a little change in the inflation numbers, if the inflation numbers come out a little higher, and it's going to be in the next 8 seconds, let's take a look and see what the numbers are. Here we go. The countdown's 3, 2, 1. Numbers are pending. Let's see what the numbers report. And we'll also the reaction of the market right here. I'm seeing the CAD Swiss actually not going any higher. We see the CPI year month on month come out just as expected. And by the way, this number could also a slightly lower right here for the medium CPI, 2.6%. That is lower than expected. That could create a reaction to the market right here. I'm not seeing all right, 2.9 came out as expected on the year-on-year trimmed CPI. And then the common CPI right here, it's just about a report again. Let's see what that number is, and should be any second right now. And while that's happening right now, I'm going to go ahead and take a look at the market reaction. Now, remember, traders, a lot of this news could already be discounted into the marketplace. All right, I'm going to go to the 15-minute time frame. There we go. Spike to the downside. But I want to go ahead and point out a couple of things here. This is a 15-minute time frame. Unless the market takes out the low, we've got a actual bullish market shift structure right here. If you look over here, here we had the market take out the high after it created a nice little low right here. We saw a nice breaker block being formed right here. We've got a fair value gap. See how the market comes back to retest that fair value gap, and now it's pulling back up again. This structure is actually setting up for the market to go bullish. This is actually the buy zone for traders who want to go ahead and buy in on short-term activity. And so this movement that we see in the CAD Swiss is not necessarily telling us that the CAD's going to be weak overall. It just means that the market reaction based on the news is just a panic, and we've seen a spike to the downside. I'm going to say that over the next few minutes, let's say give it maybe 15, 20, and 15, 30 minutes, this data might have already been priced in, And the market may have reacted to this, but this is not necessarily going to be the actual the long-term move on those. The long-term move is still coming from what we saw on the daily time frame. Let's go to US dollar CAD. Let's take a look at the reaction on US dollar CAD right here. Big spike to the upside. Let's take a look at, do we see any market shift right now? Well, we do actually see some market shift. And I'm going to take this low right here. And so if you take a look over here, we saw price go ahead and creating this last low right there. Price went up. This was the change of market shift right here. We had displacement down below. Price has now moved up to fair value gap. This is on a 15-minute time frame. Let's see if I can pick up something on the 1 hour. Not so much on the 1 hour giving us anything here on the 1 hour. Let me see if I can see something on the 4 hour. 4 hour just showing a little bit of indecision here, but it's really the 15-minute time frame right here that's giving us this little spike here. Now, if we see a railway track, for those that don't know what a railway track is, if we see price doing this, and then the next move, we see a bearish candle right here, right? Something like that. This is going to indicate that we're heading aggressively south. So it's going to be important to see how the 15-minute time frame closes out and what the next 15-minute time frame is going to indicate, right? So we'll keep an eye on this. So we can definitely keep an eye on this. Now, has the Canadian dollar affected other currency pairs? Ones that are not traded against the Canadian. So as an example right here, did we see any market reaction to, let's go take a look at oil. Oil is a commodity of they're producing oil. There's an oil producing country. Let's get an Aussie US dollar right here. Not seeing any sort of market reaction there. Let's take a look at JPY. So a little bit of movement right here on the JPY. Let's see if it's from the news. Yep, it's coming from a little bit from the news here. This is Euro JPY. So it looks like we got some Euro reaction. There's a spinning top right there. Let's take a look over here. We had a little bit of reaction here. I'm on the 5-minute time frame just to see the reaction on the news. Euro is starting to pump a little higher as well. Could it be weaker US dollar that's causing that as well? All right. Okay, so let's go back to the JPY, the Canadian crosses. Now, that is a slightly deeper correction move right here. But traders, I want to put things in perspective here. This is a 5-minute time frame. This news has caused the market to move. Let's look at over here. 15 pips on the CAD Swiss. It's a 15 pip move, traders. Not huge. Now, you would think that there would be a bigger reaction considering that the number came out at 2.7. They were expecting 2.7. The previous number was 2.8. Do you know what I would love to see right here? I would actually love to see what the revised number is going to be next month. Because it's like someone's going to get fired, right? How many times have we seen numbers being reported and the next month, what happens? We have a revised number. And the revised number is different to what they expected right there. All right? So it's going to be real interesting to see whether or not this data that we see right here is going to hold. Now I'm going to let me go to the larger time frame. I'm going to go to 1 hour. All right, let's take a look at the 1 hour. So on the 1 hour on the CAD Swiss right here, let's see here. We've got an order block right here. We can see that we had a fair value gap sitting over here. So we've got a lot of orders sitting here and a big order flow right there. We have a fair value gap down here below. Price is looking like it's breaking structure here on the 1 hour, taking out that low. And we'll look at a shift in market structure right here. But all it tells me right now, if I read between the lines right here, this dip that I'm seeing right now is just a correction before the next move. That's what it is. So am I concerned about this downside move here? No. What I'm actually looking at is this is creating an opportunity for buyers to come into the market again. So this is where we have a lot of smart money sitting on the side right here, using this opportunity to allow the market to work its way down to where smart money is going to come back in and start buying out the market at discount pricing. All right. So you have premium and you have discount. In an uptrend, we're looking for discount. And this is what it is. And remember what I said early on, right? The market is constantly looking for equilibrium. So when I look at this right here, what's going to be a very key level is going to be where our equilibrium levels are. And that at the moment right now looks like we're going to be just below this fair value gap right here. So this is where we could see price wanting to come back to before seeing a move to the upside. So don't be surprised if 66.45 comes to play, maybe 66.40 here on the CAD Swiss, and then looking for buyers to come back into the market and start pushing price back up again. Now, I'm going to move to another currency pair. Let's go to New Zealand CAD, and let's take a look at New Zealand CAD right here. So on New Zealand CAD, look at the bigger picture right here, all right? Let's take a look at the bigger picture. So the bigger picture right here, do you see market shift being taking place? The market structure shift, right? So here's your low, here's your high. Do we take out the low, right? You see right here, we have a stop rate. We don't really see much displacement here, but this move right here that we've seen, this correction move right here, is moving back to a fair value gap. Price is going to come in full liquidity at these areas. And when it does, we're going to look for price to then go ahead and work its way back down. We have a fair value gap down here. Price is going to still come back down to fill this gap right here. And then, of course, we've got some further support and resistance down a little lower. All right. Old resistance now becoming support down here. Are we expecting this pair to move down? Let's take a look at the daily. See how the market took out some buy-side liquidity here, created a bearish candlestick formation. This is a correction move. This is a retest of that bearish candlestick formation. Price is going to come back into this fair value gap right here, full liquidity before we see another upside move. Let's go back to the Aussie Canadian. Saw the same thing. Price is taking out the highs. We're looking for a reversal pattern. We know we don't have it, right? We don't have that change in directional bias. But this could be just a temporary move. And again, I'm only going to get excited about whether we're having breakout with a bullish or bearish at the close of today. Today's close candle will define whether or not the market's actually truly going to continue with the current data that was reported, or the direction that the data is pushing the market. But we'll only notice that by the end of today. All right. So what do we need to look for? I mean, what is that takeaway from today? And excuse me right here. What is the takeaway from today, right? What do we have to look at? What are the key levels or the key things that we're looking for right here? Well, the key things that we're looking for right here is price. Are we going to get a directional bias change, right? We're not going to get market shift, but we're going to see additional confirmation of directional bias. And so what is the thing we're looking for on the Aussie Canadian dollar? Well, I'm going to give you the highs and lows, right? The high of this previous daily trading candle is 91.25. We need the market to break above that. And I'm going to go to the lower time frame. I'm going to tell you what that looks like in a minute here. But we need to break above that if the market's going to go above. If the market fails to take out the high of today at the highs at 91.25, if the market fails to break above that, then traders, we got to think to bearish to the downside. And so what we were looking for is lower time frame reversal patterns. All right. So we may test the high, but the question is, do we break above that? And if we don't, then we'll look for reversal structure on the lower time frames to indicate that price is going to try and sweep the lows down here at this level. And that level is once again going to be at 90.58, and possibly then look for price to sweep this low, this new low, at 90.67. Now we can once again go down to the lower time frame, and we can look at the lower time frame and look at the structure on the lower time frame. And what I'm seeing right now, if the market holds the high, right, what I'm seeing is that we have a wave structure, one, and this is what we call an irregular flat. An irregular flat is where price does not stay below the major low right here, and it comes back up for a deeper retracement move as it retests this area right here, comes back on a deeper retracement move. And then right here, this is where we're going to start looking for levels of resistance where we can anticipate price to turn and head back down south. Now, if I was trading this, I would be looking for this area right here, looking for reversals. So we can even go down, if you want to look for a perfect entry point, go down to a 1 minute time frame, go down to a 5 minute time frame, and look for market shift in this area. And it might take a few hours before we get enough candle data to be able to decide or define a good market shift right here. And then when we see a good market structure shift here, then we can go ahead and look to go ahead and trade it short. Up until that point, I think it's going to be a waiting game. Now let's move to something different, like pound. We're having big movement out of the pound right here. This is pound Canadian dollar. Big move to the upside right here. Question is, what is the daily looking like? Okay, here's the daily. You've got to pay attention to these details, my friends. Look at that. We got a buy side liquidity level right here being taken out. So if that's going to be the case, what are we going to do? We're now going to be looking for price to want to come back down. So we're looking for fair value gaps. Look over here. We have a fair value gap right here. So price is going to come back to retest those levels before going further north. All right, we're going to get a sort of correction moves. Now, do we just go ahead and short the market? No, not at all. But what we will be looking for here at the top is we'll be looking for reversals. So now I'm going to go down to 15-minute time frame. And so here we have it. Okay, we have price creating a high, low, new high. And so we'll be looking for the market to go ahead and reverse. And then on this reversal, we'll look for price to continue to fall back down south. Now, remember, this is a 15-minute time frame. We'll look for an early reversal for some short-term scalping. Move down to a 5-minute time frame. Move down to a 1-minute time frame. And look for market shift changes for some quick scalping moves to the downside. Because remember, the daily time frame is already giving us an indication that we're going to see some downside action. All right. What we're going to be looking for is market structure shift. That's what we look for. That's key. Now, for some of you that are saying, but Big Dog, what does that mean? It means reversal patterns, right? What is reversal patterns? Think about a king's crown. What is a king's crown? A king's crown is an ideal scenario of a pattern that's showing you market structure shift, right? And it looks like this, right? Market goes up, comes down. We have a stop rate. We've got the price to break it above that level right here. Then we have another stop rate down here. Price then displaces. We have a market structure shift. And then we see price come back up again to fair value gaps, which is resistance levels. And then we see price falling. This is the King's Crown structure that we will want to pay a little bit more attention to. And so traders, when it comes to news, some traders like to wait until the news settles out, the dust settles, before going ahead and executing a trade. And it wouldn't be any different in today's trading. You'd probably want to go ahead and wait for things to settle down because you've got to wait for structure to build up, right? And when you've got good structure, then you can use structure to be able to determine the directional bias, but also to be able to define where your entry level is going to be at. Specifically those that don't use cost averaging as their trading approach, for those that want to use stop losses and protect their positions that way, or protect their risk that way, then having structure is vitally important in order for you to be able to have a good entry point, but also to know exactly where to place your stop losses so that you don't get a stop raid before the market ends up moving in the direction that you're trading. So keep those things in mind. It's important to keep those in mind as you're looking for your setups. And so traders, as we continue to monitor the market's movement today, my focus is, just so that everyone knows what I'm going to be doing right here, I'm going to be paying a little more attention to how the market closes out today. All right. And so if you want to go ahead and, follow me, make sure that you subscribe to this channel. Go ahead and subscribe, connect with go ahead and click the notification bell, because traders, I will go ahead in the next couple of days, have another broadcast where I'm going to actually go ahead and talk about how the news today has created the directional bias, has given us the confirmation that we need in order to be able to trade. Now, it might be Thursday, might be Friday that I go ahead and do that broadcast. But when I do that, you will know exactly what we're looking for and what's set up and how we traded it based on market structure. Very important trade. Last currency pair as we go ahead and close off today is US dollar CAD. Let's go back to the US dollar CAD right here. Once again, I'm moving to the larger time frame. This is going to be the 1 hour right here. And the 1 hour, I can see this big fair value gap right here. That price has gone ahead and tested down the top of that area. I'm going to go to the 4 hour time frame. And the reason why I'm going to 4 hour time frame right here is because I noticed that there is quite a bit of resistance coming off this area right about here. And so the 4 hour time frame may also be a good signal to see if the 4 hour time frame does close out above here. And if it does, then we got to continue to monitor for market shift structure or to this market structure change. And if we do get that, then we could possibly start looking for the market continue to sell. The overall direction on the US dollar CAD is still bearish. Despite of this rally that we're seeing right now, it's still bearish. So this may just be a market reaction and may not be a long-term move on the US dollar CAD. So it's going to be interesting to see how this all plays out. And if you really want to go ahead and quantify this, let's take a look at the actual movement in this last, let's go into the last hour. In fact, let's take the last 30 minutes. In the last 30 minutes when the news came out, how much did the market really move? So far, the market has moved up 41 pips. 41 pips. Now, the question here is, out of the 41 pips that the market had moved, what's the closing price going to be in the next 12 or 10 minutes? Where does this 30-minute time frame close? How much of this 41 pip move will the market maintain after 30 minutes? And that is where you can actually start seeing some sort of loss in momentum as the dust starts settling, as traders start identifying and digesting the news. You'll clearly start seeing some changes in the market, and you'll see a different sort of structure forming. Let's wait and see how this plays out. It's going to be exciting. Well, that pretty much wraps up the traders. Very exciting move. Got a data that came out way different than what we expected. All right, way different, much lower. All right, the market reacted accordingly. That's the only reason why we would see a bearish move in that Canadian dollar is if the news came out lower than expected, and we did get that news. But I still believe that this is not good enough to keep price moving lower on the Canadian dollar, and that we actually will see a reaction by the end of today. By the end of today is going to be the key factor. And if you want to follow me on my Telegram channel, make sure you go ahead and do that. Follow me on my Telegram channel as well. In the description down below is the Telegram channel link. Go ahead and check it out. I will give some updates throughout the day based on the news today. So if you want to keep in the know, follow me on my Telegram channel. Follow me on my FX Big Dog YouTube channel, Twitter, Facebook, the whole shabam. And I'll keep you guys updated as to what develops over the next 24 hours. All right, traders, with that being said, thank you for joining. Thanks for being here. And I will see everyone back again in the next broadcast. This is FX Big Dog signing off.